Hello traders, just as I was about to record this session on trading the NQ, I've just taken a trade on the ES and I'm just targeting the lower pivot. So this is going to be an interesting start to our video. Come on, now you can see here it's tagged now I'm filled. So that was a $1,208 trade. So in today's session, as you're about to see, we're going to be looking at some trades on the NQ and the RTY. This, as I mentioned, was the ES, which you've probably seen me record some of my sessions on the ES, and this is just a plain vanilla what I call a T10, a setup we see in the market every single day. In fact, you can actually see on the chart here, here's my turning points. Now you get the turning point on the very next candle after these, and you can then see also my turning point indicator. You can actually trade in the direction of the trend of that, and it's based on square root numbers. Very accurate for picking turning points. So anyway, this is a nice start to my trading day. So it is, by the way, it's 1:28 a.m. Central Standard Time. So we've got the London Open, the market, the European market is open. In fact, we just got to watch it, maybe a wee bit too fast. So I'll just keep an eye on this. So let me come back to that. And do I have a T3? I've actually got what we call a T3 set up as well. So let me pause this and let me pull up the disclaimer and whatever. So now we'll get the proper video underway. So watching Scalp and day trade the NQ and RTY. Now the NQ was in my live trading room. So I run a live trading room between 2 and 3 mornings or evenings a week, and I also run a coaching room. So in the live trading room, I only trade one contract, as you'll see, but I'll trade up to 10 contracts when I'm on my own. What's the difference? I can focus. Focus is very important. In fact, what's the F word when it comes to day trading? It's focus, and it's very true. Now here you're going to see 9 trades for 8 wins and 1 loss. In fact, the loss I took was actually quite a silly trade. It was actually a dumb trade. I just should not have taken the trade, but let me explain it to you when we actually get there. So traders, there is a risk in trading. Don't trade with money that you can't afford to lose. Stay on the simulator until you are consistently profitable. Many of you, of course, have seen my videos virtually every day. And as the late Mark Douglas would say, to become a market expert, become an expert when it comes to trading, master pattern-based trading. So everything I do is based upon a pattern, either in the over extension, or it might be a trend following or a counter trend, double top, etc. But it's very important that you start there. But also traders, it's important that you start by trading with the trend only. So many traders hope that, even I do at times, hope the market's going to reverse. Okay, but if you're going to take a reversal trade, you've got to really know, or a counter trend trade, you've got to really understand angulation and divergence. That's very important. Oh, and this here, this slide should not be here. It should be this one. Okay, so if you're unfamiliar with the market, and that T3 didn't quite set up, and we've got a trend continuation, so we might even go back to that if we have time, if I can keep this under 30 minutes. So if you like trading the NQ, the NQ is $20 a point. NQ is what have I done there? Yeah, $2 a point, sorry. The micro NQ is $2 a point, and the big contract's $20 a point. So the micro is 10% of the value of a big contract. Great spot to start with on the micro, and once you build your account, then start trading the big contract. Then we've got the RTY, and the symbol for the micro on the RTY, which is 10% of the value, is M2K. So there's points and ticks on the micro, but a point is a tick on the RTY. Now This is very, very important. And I know, in the end, I want you to come and join as a member of my trading program. I want you to join my live trading room, my coaching program. And if I didn't show you these, probably more people would probably join. However, it's very, very important. Hand on heart, I've got to talk to you about risk management and money management. And this is where, a lot of traders will switch off now. They don't want to hear it. Have you ever saying what you don't know can't hurt you? It's ridiculous. It can hurt you big time. It can actually ruin your potential as a scalper and day trader. You go and blow your account 2 or 3 times and it totally shatters your confidence, and that's very, very hard to repair. So you'll see here that you do need to have, particularly if we look at and you can't really see it there, but the RTY, the YM, you really need to have between $2,500 and $4,000 to trade that market. And here we're trading on the NQ, the 6 tech NQ. You need to have between $5,000 and $6,000, and the reason on the variance is just that's your stop loss. And whether you trade tick charts, time-based charts, it doesn't really matter. Well, actually it does. I prefer Renko and tick charts. I don't like time-based charts because of the big candles you can get. Okay, that's why. But you've got to follow the money management rules. And I know that the brokers say you've got intraday margins. I know that. However, that's not what we follow. We've got to look at our over account balance. We never risk any more than 2%. Now, what would it mean to you if you could earn an extra $5,000 a week, or even $1,000 a week, or for the young guns here, $10,000 a week? That's a true potential for a successful day trader. How do you become successful? As the late Mark Douglas identify patterns that set up day in, day out. And there's basically, I've identified probably about 15 patterns that we see every single day in the market, in every market, every time frame. Now, of course, if you're trading a very high time frame, you're going to have a lot less of these patterns. And if you're trading a lower time frame, you're going to have a lot more. Likewise, when you first start trading, you only want to trade a couple of these patterns. Okay, you've got to get used to it. All right, it's a bit like driving that stick shift. It takes you a good 30 to 60 days before you master it. Likewise, you master one, or say 2 or 3 strategies that work hand in hand, then you can add another. Then you can build the amount of setups that you trade over a period of time. Now, in the end, what you want to learn to do is we want to be trading in the direction of a higher time frame, as you'll see when I go to the recordings. So I'll skip ahead on the recordings because otherwise we'll be here for 2 hours, but I'll show you the important parts. And what we're looking for here, traders, we're looking for retracements. We're looking for retracements and then trend continuations. Why? Because they work. All right, what gives us our edge? It's trading, waiting for a pullback on a smaller time frame back in the direction of a higher time frame. Now, for an example, we just had a beautiful divergence trade. Actually, I call it a T3. Actually, it's let me just quickly show you this, if I may. This is really important, traders. See how we've come down here and we're bouncing. See that there? That's the current day's low. See that there? These become what we call price magnets, and you'll see this on a slide in a moment. We tend to bounce in between pivots, the open, high, low, and close, and the high and low of day. All of these are what we call price magnets. Now, before, when I said we had a T3, you do need 3 higher closes before that qualifies. And in this particular case, where we've got divergence, we require the anchor chart 1 candle to close. Now, what do I mean by that? This is lesson number 1 that will save you a fortune and make you a fortune. See, on the way down here on my entry chart, I then get to this point. It's looking good. I've got my super scalper just there, see the white paper, and I've got my turning point saying buy, buy, buy. However, we're not going to buy there because we want to confirm on the anchor chart. After all of these red candles, we want to make sure that we've got a green candle, and we don't actually get that until we're down here. So you don't have an entry until here, and then you go and take this. Remember, it's a CT trade. What are your EMAs doing? They're in a strong downtrend, so we want to cover pretty quickly. And so now we're coming back down here, and we'll come back to this because I wasn't planning to show you this, but we've got a lot of divergence. This is live, so I had no idea what was going to be happening here. But what we've got here is a potential double bottom bouncing off the low of day. But let's come back to that because it hasn't qualified yet, hasn't set up. I'm waiting for my super scalper, waiting for the anchor chart 1 candle to close. So going back to our PowerPoint here, this is exactly what we're looking for. We're looking for these for reversals where we get the higher time frame turning and then back in the direction of the trend again. Now what we're going to be looking at is some of my trades here. Now this is the RTY, and as you'll see here, this is why I front run. And what exactly do I mean by that? You know that trade I just took on the ES? That was a T10. Now this is on the RTY. This was a T10 setup. These are pattern-based setups that we take. We use our instruments to tell us when we should be entering. See this 3B down here. What can you see? We're bouncing off major EMAs just here. Then I had another T10. Now I was a little bit lucky with this one. I kept at my entry, I kept my 8-tick stop in place. So when I'm trading a 2-tick RTY, I have an 8-tick stop loss. When I trade the 4-tick RTY during the New York hours, for me, I trade the New York afternoon, I have a 10-tick stop loss, and I trade a 4-tick Renko. Now why? Because that works really well, that time frame. So did I? Yes, good. I had to cough, so just pause the video. So just here where I took this T10, it was a textbook entry. However, normally I have my entry and I'm maxing out my stop loss 1 to 2 ticks below the swing. However, I got in at a good price and my 8-tick kept me in. Now let's just say here, if I had been stopped here, I had another entry just there and I had another entry back here. Now as you'll see in the video, front run the pivot, I typed that in as the market was setting up. And what I mean by that, this is a pivot, and as you'll see live in a moment, this is the recording of the live. This is where I exited, and look what happened. We were reversed. Traders, this is where I'm still blown away that I charge peanuts to do my training. I just want to, and this is not going to be a big sell here, by the way. You know, one trade and you've got your investment back in the investment that I asked traders to come and join me in my live trading room. Just this alone, knowing how pivots work. We have a setup called a T28, which is a pivot magnet trade, which is on average about a 90% trade. Just that one setup. But let me get off my high horse and let me show you this just here. What we are also going to be looking at here is, and I'll skip fairly quickly, already I'm nearly 15 minutes in, but here just in my live trading room with the members, this is where I was talking to them about trade entries. Now my live room goes for 2 hours. I'll just go through 6 of the trades in a moment. Here was, and I'll explain this one here why we're here. This was just a silly trade. Remember a moment ago I was talking to you about pivot bounces, pivot magnets, etc., and to cover. Look what I did right there. I sold straight into, not only did I sell into a pivot, but I sold into yesterday's high. Okay, now that was just, it was a silly trade. What was I doing at the time? I was talking to the traders. I was doing things as I'm running the live trading room. We'd been going at that time for about 20 minutes. It was just a silly trade. This is why it's so important when you trade, turn off your phone. Here I've got my phones here, by the way, and focus like a laser beam. So that was that's 3 of the trades. Then I had here a scalp, a trade, then nice double top. Actually, I jumped in on the T10, nice double top. I don't know why I didn't take that one. I know why. In the live trading room, I don't take divergence trades, and I'll tell you why. I really recommend traders trade with the trend initially. So you'll see in my videos, I take divergence trades all the time. However, I've been day trading now for 28 years. Okay, I'll be very quick here. Now, to trade the 2-tick RTY that I'm showing you, the live trades in a moment, you need $2,500 per contract to trade it correctly. And what I mean by that, that's never risking any more than uh, 8 ticks. Okay, so it's very, very important. My apologies, up to 10 ticks. Before I said on the 4-tick I risk no more than 10 ticks. My videos are raw, real, and unedited. On the 4-tick, let me correct myself, I risk no more than 16 ticks. On this market, on a 2-tick, it's no more than 10 ticks. Sorry if I confuse you, but that's important that I just correct myself there. Otherwise, my members will be emailing me, can you please clarify? Now, you can get going with as little as $250. If you go for just $13 a day, in 13 weeks, you've got the money. You've got nearly $3,000. You can roll over and start trading the big contract. If you're trading a $2,500 account on the RTY going for 125, which is only 25 ticks, you truly have the potential of earning your 10 grand a week in 14 weeks. I do want to say something here on the RTY 2-tick during the Globex session. It's what we call thinly traded. I find that when I trade 10 contracts this time of day, I'll quite often get, it's called slippage, 1 to 2 tick slip, where on the ES no problem, on the 6J no slippage, but on the RTY I do get on 10 lots 1 to 2 tick slippage. So, and the reason I bring that up, down here you're trading 17 lots during the Globex session. I'd be considering another market, but that's another story for another time. Now if I skip along here, and on the where are we here? Oh, that's if you're trading the 4-tick. So if you're trading the 4-tick, which I'm not doing here in this video, how about I jump ahead out of this one? Let's just really get to the meat of things in a moment. One thing, we are going to be looking at the NQ here. If you're going to trade the 6-tick, you need $6,000 to trade it correctly. So in the live trading room, you need that. Now you've got no problems trading 8 to 10 contracts there, but just be aware you do need a larger account size. Now a moment ago I mentioned there are some critical areas that we need to take note of. Our pivot levels, prior open, high, low and closed, major EMAs. Why all of these levels? They are price magnets, and they also act as major support resistance levels. So let me start with this one. Now this is what I've just done is just turn the sound off. This is a live trading room session, and I'll skip ahead. What's important for you, I'm going to explain some of the setups to you so you understand what exactly am I looking for when I day trade. And you know, once again, it's about learning the patterns, and it's anticipating in advance what may happen. In some ways I refer back to it like playing chess. You know, your opponents might go these different directions, so we're just thinking about the patterns. Now this is this silly trade I took just here. You know, look, I tell my traders to apply what I call black box thinking. Black box thinking means that from the aircraft industry, of course, the safety board and whatever, when there's an accident, they apply like, what can we learn from that black box? Likewise, when we have a trade like this, and see how we would have been stopped there, see how we're stopped there, we just don't sell right at a pivot, and especially if you've got divergence. So that was just a silly trade. So let me now start playing this, and I'm going to jump ahead at times, but I'll explain exactly what I'm looking for. Now potentially I could have taken this, and this is what we call a T3. It's a reversion to the mean trade, and we actually had one over here as well. Reversion to the mean, a great scalping opportunities here. We could have gone short there, we could have gone long, and here I'm looking for anticipating a potential long trade. I've got a higher high, I'm now looking for a higher low, and I've gone long here. And sorry if I jumped ahead here. And as a scalper, I generally have a fixed target. The time I will increase my target if I'm buying into a pivot or a major area support or resistance. Likewise, I'll decrease my target, go for a smaller one if I'm very close to a major area of support or resistance. Okay, so just here I've gone long, my stop's just below here. I've got a 20 tick stop or thereabouts, between 18 and 20 usually. Let's just move this along a little bit here, and you can see up there I've got a fixed stop. Now what I will do, once I hit a certain target, I'll then usually go to break even like I've just done here. Now with modern trading platforms, of course, they will automatically or can automatically take you to break even. I tend to find I manually manage that more often than not now. I'll lift it up when I'm ready, just if I'm in a bit of chop, or so that's something you can either get to break even automatically or manage it. But what is a non-negotiable trade is placing a stop loss. Okay, that is what we call a non-negotiable. Now see up here, I've got a pivot and I've got the current day's high. Now usually you'll stair step your way up to a target or way up there like that. So usually it's a stair step scenario. So I'm just going to move this along here. I hit my target. Now I'm looking for another trade. Now I do have some divergence. I'm looking over here on the right there at my anchor chart. I've discovered a formula. Once again, I've been trading for 28 years, a formula where it just works brilliantly for your entry chart, anchor chart 1 and anchor chart 2. So I'll run with three charts. I don't refer to the anchor chart 3. Maybe every 15 minutes I'll glance at it, just the overall trend direction and for potential reversals. But the anchor chart 1 is very, very important. Now if you're a brand new trader, this is not rocket science, and it just takes a matter of learning what exactly I'm looking for and what you should be looking for. Okay, and basically anyone that's committed can learn this. It's not rocket science. It's just a matter of learning the patterns, looking for the retracements. So I'm just looking for a setup. And I've got one. I don't know whether I take this, but it looks like there's a potential, and I did too. There's a potential long just there, and this is what I call a 2B, just a plain vanilla setup. I'm looking no doubt at the swing high over here. I'll just move this along. So note here I've had a higher high, I've got a higher low. Now each one of these steps, by the way, is worth, I think this is a 6 tick, is worth $15. Okay, and or maybe on this one maybe it's only a 4 tick. If it's a 4 tick, it's only worth $10 per step. Doesn't matter too much. I think actually it is only a 2 tick. Okay, that's a 4 tick, and what that means is each one of these candles, I thought I was on the 6 tick, but anyway, each one of these candles from the high to the low is 4 ticks or $20, and each halfway point is worth $10. Okay, and that will just vary based upon the size of the bricks that you're trading. Very, very easy to learn once again. So note here I'm just going to break even. I don't want to give this back here, so we're already up $95 just there. 1 2 3 4. Tell you what, it is the 15. Sorry, doesn't matter. I'm talking to myself. Okay, so I've exited the trade just here. So we're just looking at this. By the way, look at all this divergence we've got here. So we've got a double top just here. I've got major divergence, and I can't remember exactly what and it pulls back. Okay, and you can see I'm just referring to the higher time frame over there, just checking that out. So let me just fast forward this a bit. Okay, and this here is known as a 3B, but that would have been a very nice for experienced traders. You can see beautiful double top. Where would you sell, by the way? Whenever you come down to these major EMAs traders, and pivots, you're always expecting support at those levels. You're expecting a bounce. Now, many of you have probably heard me talk about the movie Moneyball. Don't go for the home runs, just get to base. And I interpret that when it comes to scalping and day trading, just get those small trades in. As long as you're sort of consistently profitable on those, and as you'll see, most of my trades are a good 80 to 90% accurate. Okay, and the reason being, and the other thing that makes it easy, they're patterns. They're rules-based patterns, and so if it doesn't work out, well, I believe in probabilities. I know the next trade's probably going to work out, except when you do dumb things like I did before, sold into a pivot. Now this is a trade we just should have been on. Okay, so I'm just checking out for my next one here. Okay, so just up here, I've gone here for a 3B. I should have been in on this one, as I mentioned. I've decided to jump in on this one, and these are just plain vanilla. These are trend following setups, by the way. What's the direction of your EMAs? We're in an uptrend here. Okay, so there and here I covered. So if ever I think I'm going to stall, to cover means to exit the trade, and so I've gone long again. I've covered it there, it's pulled back, then it's continued again, and what I'm pointing out there is the previous swing high. Okay, and this is where quite often we will bounce off these levels. So I'm going through this. I've gone the break even, just talking to members about that, and we hit our target. Thank you very much. Okay, and look what we're bouncing off at the moment, a pivot. Surprise, surprise. Now, and it's a T3 for members watching this, you know, of course this is in the training video, but just there, that is a T3 reversal. Very high probability. Just imagine an elastic band being stretched. That's really what this is. And let me just move along. So I've got a 2BD. That's another trend continuation setup. Now we've got a really nice double top. It's I've got great divergence on my higher time frame, and this is a T10 again, a T10 short just there. Your best T10s are after we have major divergence usually, or 3 or 4 waves in the market. So you can see here it gave me a wee bit of heat just there. And just to move this along, I can't remember where we got out of that trade, but let's just see. Okay, so come down, we hit our target, and we're out of that. Let me now quickly show the RTY, because we are running out of time. So with the RTY, it's not a full recording here. It's just a partial recording. So we're already ticking over, and this was just before the live trading room. I was doing some of my own trading. Here is once again a T10. Before then, a great trend following, and here is another T3. We actually had a T10 there. I took this one, thank you very much, and then I jumped in on the 3B, very high probability trade. And there is this T10 I mentioned to you traders, where if I had have tightened my stop to 1 tick below, I would have been stopped on that one, but then I had a re-entry just here. But because I kept my stop at 8 ticks, that kept me in. Now over here, remember I mentioned about front running. This is where why you don't want to sell generally right at a pivot. And you can see over here I typed in, and let's just go back to this. So just going back to this here just to show you. So way back here I'm putting in, we're long on saying front run the pivot, and bang, and there we can see not long after we bounce straight off that pivot for a big reversal. Okay, so that was 40 minutes of trading and a great trading session. Once again, trading rules-based setups that are all patterns, and that was over and done with within 40 minutes. So traders, this is not rocket science. It's about learning how to trade patterns. It's about patience and discipline, and also money management. That is, if you don't have, like, to trade this particular one, you need 2,500 per contract on the RTY. If you don't have 2,500, you start on the micro. Even if you got 2,500, so if you got 5-10,000, I actually recommend to traders that they start on the micro, cut their teeth on that, and actually even before they start on the micro, start on the simulator, cut your teeth on that, then you go to a micro. Then maybe after 5 to 10 weeks, then you decide to go and start trading the big contract, because there's only one way to learn how to day trade, or to scalp and master the art of day trade. It's the right way the first time, and here it is here, just a classic pivot bounce. And as I mentioned, traders, you can find out more about my programs if you're watching this on YouTube, in the description link below. But one trade, you'll get this back, the investment that I charge for members to join. So traders, hope you got something out of this, and see you on the next video. Cheers everyone.